Okay.
Select that. Fantastic. Market update, Tribeca Trade Group. Just by way of introduction, Christian, you've been in the city, but afterwards you've been on Wall Street, I suppose you describe it as, career in sort of investment banking, and the last. Oh, there we are. Sorry. shall I, shall I let you explain how you came to be the CEO and founder of Tribeca Trade Group?
Yeah, sure, absolutely, and thanks for the intro. Yeah, I don't mind. I love coming on as if you're a American baseball fan. I love being a relief pitcher, and no problem coming in and taking another slot.
Great.
So yeah, so just a quick background if you're new to me and haven't met me before in one of these, thank you again, Simon, for having me on. I really enjoy coming on and giving my perspective. I always like talking about the markets and what's going on. It's always a bit of a puzzle. It's a puzzle you could basically never solve, but you always feel like you get a little bit close, and when you do, you kind of throw your hands up and you get excited. But yeah, so I started my career on Wall Street. I actually started my career off as a financial advisor at Morgan Stanley, and I moved over to the institutional trading side. I went to the trading side over at Merrill Lynch before it was Bank of America Merrill Lynch, and I did a whole bunch of things, whole bunch of different trading, and I was really lucky in my institutional trading career because I had the ability to trade a lot of different products. So I've traded single stock equities, I've traded ETFs, I've traded futures, I've traded Delta One products, so equity swaps. I used to run the customized index platform before there was an explosion in ETFs. So which really kind of led me over to ETFs. I knew all the mechanics behind creating an index, and back in the day, that's what a lot of hedge funds were doing before there was ETFs. They were customizing their own index to either go long or go short. So I also had the pleasure of trading commodities, some FX and so forth. So a little bit of everything. If you ever hear Delta One trading, it's basically a lot of different products on one trading desk. So I did that for a long time. I was a director of ETF trading at Bank of America Merrill Lynch, and then I decided to kind of go on my own and start my own company and manage my own money. And so what we do at Tribeca Trade Group is, first of all, I manage my own money. All of my subscribers get to see me trade live, both in cash and regular stock, as well as options. So we do a lot of option trading, and I'm going to talk about that and why that's interesting. We kind of monitor and read the tape all day long. Basically, I'm looking for ideas all day long. So I'm reading the tape. I'm looking for very aggressive option activity, and I'll kind of get into that and why that really helps me a lot. And I've got a couple slides that I can show. But my Twitter handle is @Fromhertz. I'm pretty active on Twitter, so if you're new and you're not following me, go ahead and give me a follow, and you'll kind of see the information that I send out. So on a daily basis, because my background is in ETFs, and I really do a lot of analyzing in what goes on in the ETF world, that helps me pick up on trends. So on every day at Twitter, I send out what's happened in terms of inflows and outflows in terms of U.S. ETFs, U.S. equity ETFs, as well as international ETFs. And one of the trends that's been really interesting, so I'm going to talk a little bit about trends, and I'm going to talk about what we do on a daily basis in our trading room and what my approach is at Tribeca Trade Group. And Simon, by any means, if there's any questions, feel free to kind of throw them back, because I want to have as much of a discussion with you guys as possible. But so first things first, yeah. So what I'll do, what trend that we've been seeing in the last few weeks, and almost I would say the last 2 months. Probably I talked about this a little bit about a month ago, but what's been really different is the amount of attention that obviously in the U.S., it is what it is. We're very focused on U.S. markets. We're focused on ourselves, right? This is how Americans get classified. But we're so focused on U.S. that a lot of times a lot of traders don't look at international markets, and they don't look to see what's going on globally. That's my bread and butter, because that's what I used to trade a lot when I was an institutional trader. Is I not only looked at U.S. markets, but we also used to run an international book. And so if somebody wanted to put a big trade on emerging markets, on Europe and developed markets, Australia, I was able to do that, and I was quite familiar with those markets, and which has really helped me to kind of spot the trend of really a lot of money that's been going into emerging markets and into developed markets. A lot of money has been going into Europe, and a lot of money has been going into Japan since the fourth quarter of 2016, where we saw this trend change. And so really, it's been over the last couple weeks, there's been much more money that's been new money being put to work in international places. And in Europe, the fund flows have just been ridiculous. The amount of money that's been being put to work in Europe, much different than we've seen in the last couple of years. And finally, I think the financial media has started to pick up on this in the last couple weeks. We've been talking about it now for the last couple months, but there's just been a lot of money being put to work there, and much different than what we've seen in the last couple of years. Just in the last couple days, I could tell you, because literally it was for, I think, 3 weeks in a row, and Simon knows this because I sent him my weekend report that captures all of this. But there was 3 straight weeks of more inflows going into non-U.S. equities versus U.S. in terms of all of the dollar-denominated ETFs that are out there, which is about 1,700 ETFs that I track. So for 3 weeks in a row, we saw more money going into international versus U.S. That's different. That's been much different than it has been in the last few years. Just in the last couple of days, we've started to see some money come back into the U.S. The U.S. markets have really been besides the last couple of days. If we look at it's actually looking at the airlines, which I'll bring up in a minute. But you look at the SPY chart, we're now actually, we've strung together a few days, but for the last weeks before, and we had this big sell-off on Wednesday. But even before this Wednesday, we were just kind of really going in drips and drabs and moving at a very, very slow rate in terms of the U.S. indices. So I have traded futures in my past, but I don't really, trade futures a lot. I think that there's better opportunities out there than trading the major U.S. indices, and I'm going to kind of hone in on that a little bit in this presentation. But you always have to kind of move from one foot to the other in terms of where the opportunities are in this market. So if there's a lot of volatility in the market, which I think we all know that there's not right now, the VIX is back to like a 10 at this point. Yeah, I mean, so when the VIX gets to be above 15, I kind of put my index hat on and trade more indices because they're moving faster and there's more opportunities to make money. But right now with the VIX at a 10, I'm really focused on single stocks, and there's a lot of opportunities going on in single stocks. They're not moving together. On any given day, we see either semiconductors outperform, we see China internet companies like Wuba, Momo, Weibo, all these China internet names have been really outperforming. I think that there's an ETF out there called KWeb, which is up 40% right now year to date. So these are the trends that we've been playing in the last couple months. This ETF is now up 40% year to date. So you look at what's in this, Tencent is in there as well. But we've been all over this trend. Baidu is starting to pick up. JD for the last couple of months has been outperforming. So going back to looking at single names, the last week it's kind of been changing a little bit. Semiconductors have been one of the strongest groups that have been out there, and we continue to see a lot of action in this particular group. But I mean, look at this chart. I mean, it doesn't get much better than this chart in the semiconductors, just completely up and to the right at a 45-degree angle. But what's been different the last couple of weeks is we're actually seeing a lot of activity in consumer staples. So take a look at the consumer staples chart now breaking out. So we're actually been seeing a lot of activity in Coca-Cola, Pepsi, Kraft Heinz. This started a couple weeks ago, right when there was I guess it's been more than a couple weeks ago, but back about a month or two ago when Unilever there was a rumor about them being taken out. Since then, all of the consumer staples names have kind of gotten out of this, slowly but surely, and especially this last week, we're seeing this move up. We're also seeing this go on quietly in utilities as well, which is intriguing that both these charts look exactly the same, both utilities and consumer staples. So really, the option activity has really picked up in consumer staples. We're seeing all types of orders, and it seems like every other day we're seeing a big chunky order. A couple days ago it was in Colgate, CL. I mentioned Kraft Heinz, and then we've seen Coca-Cola now on 2 different occasions, some big call buying in the ticker KO. Yesterday there was a colossal order in Pepsi. Pepsi is also has been breaking out. So kind of goes back to the topic of what I want to discuss is, how am I finding these trades? How am I finding these breakouts? Because we're watching unusual option activity. We're basically watching, we're reading the tape, and we're finding these particular trades. Let me just bring up, and I'll give you an example. But for example, this was the trade yesterday in Pepsi. There was 20,000 options that traded yesterday, September 125 options. So, and this is when you see sweep on it, sweep opening, aggressive. So they came in twice, 2 blocks. And you could see, so I took this trade and I got into this trade right around 52 cents, and I've been taking targets up at 82 cents. So, so you look at these charts, Pepsi and what's going on in consumer staples, and it just looks a lot more interesting to me than what the overall indices are doing, even though they've started to pick up the last couple days and break out again, especially with NASDAQ. But let me just jump back to the presentation, if I can find it here. There we go. So, going back to basically, I just want to jump ahead here a little bit, but same thing with financials. Financials, if we look at the chart of financials, which has not been my favorite group at all to play. I've been actually ignoring this group because I think it looks really, really choppy, and I just don't want to be involved in it at all. It almost looks like a big head and shoulders pattern. It looks like your left shoulder. These head and shoulder patterns technically never come out to be exactly perfect. But you got a left shoulder, you got a head, you got a right shoulder. We don't know really how this is going to resolve itself. We don't know if we're going to break back above the 50 and the 100-day moving average, or if we're going to break down to the 200-day moving average. So this is a group that I really have not been wanting to get involved in at all. I think there's just better opportunities. I think there's better opportunities in a couple of those groups that I just mentioned that are starting to break out, as well as technology, which has just been on fire. So I really have not had many positions in financials or in the banks, even though they get so much press coverage in terms of what the banks are doing. They've been chopping since basically the beginning of the year. They've gone nowhere. However, until we saw about a couple of days ago, we saw a nice order in Goldman Sachs. Take a look at Goldman Sachs. We saw calls basically go up right on the 200-day moving average, which to me is a really nice setup, because if I know the trade is not going to work, all of our trades, all of them are not going to work. It's just the way it happens. But for Goldman, I had a nice defined support of the 200-day moving average. And the trade that went up a couple days ago was really the first activity that we've seen in Goldman Sachs in probably about a month or two. Sorry, this trade alert system is a little bit slow. But we saw some nice September calls that went up. Again, opening trade, aggressive trade, sweep. You could see the implied volatility move up. So I'm kind of just bringing you through the thought process. We actually see some Starbucks options that just went up right now, which Starbucks is breaking out from a multi-year trend. I'll show you the Starbucks chart in a little while. But so the thought process of how we trade at Tribeca Trade Group is I have a very systematic process to the markets. I'm looking, just as I mentioned, I'm looking for ideas. So just because a chart looks interesting to me, or there's only so many stocks that you could watch. So every time I see something that's really aggressive and different on the tape, what I will do is look at the charts and say, hey, does this fit my model? Does it make sense for me to take this trade? If I can find some nice support, which I did in Goldman, so we put this trade on in Goldman, and it's basically been up a couple days after that. It's pausing a little bit today. Looks like at the 50-day moving average. So I've already taken a little bit of profits. Actually taken off 2/3 of the trade already since this went up a couple days ago, basically at the lows. And I'll just kind of break this down for you on the hourly chart. But we basically saw calls go up right around here, right when Goldman was around like 215. So it's gone all the way through to about 220. So that's a pretty nice gain, especially when you're using options for leverage. So that was another trade. And just sticking with this financials, the financials theme, the other thing that we saw was calls go up in Citigroup. So Citi, let me just zoom out of my charts here for a minute, looks a lot different than that XLF chart. This one actually looks like it's trying to break out, and I think it looks a lot healthier than, say, JP Morgan, which looks like it's kind of caught underneath those two moving averages, just like XLF. Wells Fargo, which is another big bank in the US, also looks like it's having some trouble here. It does have that support like Goldman did, but we haven't seen it really. For me, the catalyst, could be, okay, I may want to go long Wells Fargo versus the 200-day moving average, but it really kind of pushes me into a trade when we see somebody put up a couple $1 million option premium trade like we did in Goldman. I would rather take that trade knowing that someone else is a big institutional investor is going in on that trade with me. So it makes a difference there, where charts that look identical, where both are at the 200-day moving average, I would rather go after something where someone is putting down basically a big chip and saying, hey, I like the support and I'm going to go long here. So those are the types of trades that we look at. I don't take every trade that's on the tape. It has to meet my criteria. It has to meet my system. There was a nice trade, nice big block of MAC that went up. MAC is a REIT. Just want to give you an example of something that I didn't take today that was aggressive, and I'll kind of share with you why I didn't take the trade as soon as this trade alert wants to work. Like I said, it's for whatever reason it's hesitating today. So let me just bring up the chart while we're waiting for this trade to come up. But take a look at this trade. So MAC, which is up nicely today, this is a REIT. They're more, so you can see 10,000 September calls went up today. So this does not, if you're a trend follower, which I am, this is not a trade that I want to take. This is a stock that's in a big downtrend. So I would rather not even mess with this stuff. So even though this was an aggressive trade, maybe somebody's thinking that because a lot of the names that have been reporting, especially last night and today, a lot of the retailers that have reported have actually bucked the trend and came out with pretty good earnings, such as Best Buy, Williams-Sonoma, that came out last night and this morning, and kind of give a little bit of a lift to retail names. Somebody came in and bought one of these REITs that's tied to shopping malls. But however, it doesn't fit my criteria. It doesn't. It's not in an uptrend. It's in a downtrend. So I look at the two things together. As I mentioned, I'm looking for trade ideas by looking at option volume, and it has to meet my system. It has to meet my criteria, which this does not. It's below the yellow line, the 200-day moving average. I'd pass. And I think that's good to do from time to time, because you can't take every trade. It's impossible. So you want to only take trades that fit your system, and that's what we try to teach at Tribeca Trade Group. I'm really looking to give traders an edge in their trading program that they have. And my philosophy is, kind of the old saying, teach a fisherman how to fish. Rather than just feed a guy. So we don't necessarily do that. We're really trying to teach people how to do this and how to set up their own model, their own trading system, because that's what's really important. Taking trades and putting on trades is one thing, but having the right trading system is really what it's all about, and defining your risk. So we actually have also another thing that we do. Like I said, it doesn't, just because I see a option trade on, as I mentioned, we trade both options and we trade stock. So just because I see an option trade doesn't mean I necessarily have to buy the call option or the put option. I could actually use that to put on a cash position. So this is a system that I just started a couple months ago, and it's a systematic approach to trading. Every time I put on a trade, I know my stop price right away. And the whole thing is founded upon a trend trading system. So taking some small losses and letting your winners ride. So I've got some really nice winners in here. I've got things like, that are really small positions, like HTP, just basically on a 300 lot, I'm up $800 in this position. IBN, which is an Indian bank, very small position, 350 shares, and it's kind of just been letting this one go since it broke. My signal on this one was we saw a little bit of call activity, but it broke broke out on the 200. Let's see, when did I put this one on? This was March 15th that I put this on, which was right here, this break of the this retest of the 50-day moving average, and it hasn't broken any major support, which I think is the 100-day moving average. Let's see, well, what do I have this linked to? Yeah, I have this one linked to the 100-day moving average, and it's basically set an ATR below 1.5 ATRs, which is the average true range, how much a stock moves in a given day. And I've got that set below, and as long as it doesn't break the 100-day moving average, I'm going to sit in this trade and let the trend go. So that's the approach to our stock trading as well, and we've been doing pretty well with that. Especially, we've got some positions on here like Lumber Liquidators. That's, again, another name that basically I took this signal with it. This is a company that got into a whole mess of trouble, way back when. If you go back about 5 years, you could see the chart. This was a $120 stock at one point. Real big long base in this stock, and over the last year, since it broke that 200-day moving average, it did one retest, I think, around earnings, and I think I actually got stopped out of the trade on the 50-day moving average. As soon as it reclaimed it, I got back into the trade. Put this trade on at 21.79, now marking at 29. Only just 100 shares. So really nice gain. So we have that type of portfolio, and we have an option portfolio as well that we do. So just to kind of go back to the presentation, you look at, for example, the performance in financials yesterday, which is essentially flat. Look at what Goldman did yesterday, up 1.9%, and look at Citigroup, two areas where we saw call buying. So going back to what I said in the beginning of the presentation, I'm really much more focused on single stocks because I think there's a lot more alpha right now in picking single stocks than the overall movement in the indices. So I use a top-down approach. I'm looking for the sectors or regions around the globe that are showing some momentum, that are breaking out, and then I drill down into those sectors or into those specific regions around the world and look for what names are starting to have better performance than the other names. I also rely on option activity. So for example, yesterday and I would say over the last week or so, for example, the semiconductor ETF, SMH, was up about 0.5% yesterday. But look at the performers. We actually saw a call buy right in the beginning day of Cypress. It was up 6.5%. We've been seeing call buying in MRVL, which reports after the close today. MSCC, which was another name. So here's another example. So best thing I could do is kind of show you guys some examples here. So if I go to yesterday's activity, and I think this is going to, it actually came up pretty good. Some September 50 calls were purchased. So, I took a look at that. I'm familiar with this name. I know it's a semiconductor device name. And I looked at the chart in MSCC, and I said, wow, this thing has gone all the way down, after a nice breakout back towards the end of 2016. It's basically been kind of flatlining and moving down, and it just kind of caught up with the 200-day moving average. Where did we see the calls purchased? Right on the 200-day moving average. So I took this trade I took this trade. Well, there's some Momo calls. This is a name that's on my watch list. Sorry. Some Momo calls just went up here. This is a name I just got into today. Speaking of China internet names, this is a name that had good earnings and has come down to the 50-day moving average. I just put this trade on this morning. So this is what I want to see. You could see that after a couple days of the name coming in after a big move up, somebody is looks like they're looking to buy it right now on the dip. So if I was not giving this presentation right now, I would be buying this. I'm already long in cash, but I would probably be adding an option position right now in this position because I've been looking for option activity in this name. So again, just going back to what's been the reason why I associate and look at the aggressive option activity, because you'll find that names, it'll help you pick out names, especially ones you could see these examples that I put here from yesterday with the MSCC, which I think sets up really nicely in terms of support. So let me just finish my thought as I got distracted with the Chinese internet play. This is how it is all day, by the way. You start to go over something and you get distracted because you see a big trade on the tape. So I like this trade very much because I've got defined support. Again, really helps me with my trading system to have an area where if the trade doesn't work, it becomes a small loser and not a big loser. So I've got this trade on now, and if it happens to retrace and break back below the 200-day moving average, I will get out of it. But I'm going to ride the trend. I'm going to ride the move up on the 200-day moving average and just kind of let it go and see where it goes. If I'm wrong, which, hey, every trader is going to be wrong, I've got my defined support, and I'm disciplined, and I will get out right on that break of the 200-day moving average. So that's basically what we're doing on a day-to-day basis in terms of trading. We're analyzing the flow that we see on the tape. We're kind of in the morning. I spend about 45 minutes pre-market talking about the most interesting things that are going on around the world, and then we kind of drill down from what we think the overall indices are going to do, and we drill down into the individual sectors, and then further into the individual names, and that's basically how our trading program sets up. And as Simon knows, we do have a newsletter that we send out on the weekends that kind of get traders ready for the market, and we kind of look at a lot of different macro indicators to kind of give us a feel for if the market, the overall market, is due for a pullback, or if it's a good opportunity to stay in your longs or possibly trim some of your longs. So we go through that exercise every weekend with the newsletter that we put out. So I just wanted to pause here to see if there's any questions, because I typically cover a lot of information and I do it quickly. So I just wanted to pause here and see if there's any questions, and in particular if there's any questions about trend trading, which is basically what we're doing in our room, and using options to help facilitate the trades.
Okay, does anybody have any questions for Christian? Yeah, it says it looks like you've done a lot of software programming, Christian. You're just very familiar with the Bloomberg screen.
Yeah, absolutely. I build from my days at I build from my days. This is our option port, so you can actually see. This is members only get to see this as well. But yeah, Excel is just a great thing to learn. I am not a programmer, but I know enough to get by in terms of using. I do pay for a Bloomberg terminal because it allows me to pull so much information, and it allows me to kind of automate my trading as well. One of the major things that I tell our subscribers is that one of the hardest things in trading is you only have one set of eyes. So you need to and it's so nice to be a retail trader in this environment, because 10 or 15 years ago, you didn't have the ability to kind of automate your trading. It just wasn't there. The trading systems are so much better than they used to be. So you could set alerts, which is what I do a lot of times. I look for breakouts and certain things. So basically, I don't take a trade unless it hits an alert. But you could do all this like while the market's closed. You could set alerts for your stop prices. You could set alerts, for soft stops. I don't really put any hard stops in, but if names are breaking down, where a trade begins, just like I mentioned for the 200-day moving average, I've got alerts like just all over the place that will tell me when a trade does not work, because you want to be on top of this stuff. If you're not on top of it, sometimes that's where you can, kind of leak some P&L and you get away from your trading system. But it's just gotten so much better over the years from when I started to trade, showing my age a little bit, but back in like 1998 and 1999, where there was, very, very little going on in terms of being able to have automated strategies and so forth. So, I've been very pleased, and it also kind of helped me transition from the institutional world, where I thought, 10 years ago, the institutional traders had such a big advantage over retail traders. I still think there's a little bit, institutional traders still have an advantage, but the gap has narrowed significantly over the last 10 years.
Okay, thank you. Joaquin says, how much is a Bloomberg terminal every month? Is it something that retail traders could utilize? I think it's quite pricey, isn't it?
Yeah, it's so this is what pains me. It pains me to talk about it because it is expensive. It's about $2,000 a month.
There we are. And I suppose when you look at it in context, it could pay for itself.
Yeah. So so that's so I know I'm kind of plugging my training room a lot, but that's one of the resources that I kind of that I allow my traders to see, is to kind of, I give them as much information as possible. So while I've got the terminal and I pay for it, it's an advantage of a trader being in my room, because basically all day long. And I'll just kind of share with you what our chat room looks like, which, we're kind of posting things all day long, but I'll post, we're kind of got some jokes going back and forth here as well, but, I'll post on a given, like things like this. I was talking about that MAC trade, and I'll flash a story from Bloomberg that was talking about mall REITs, which is what the trade that we saw earlier in the MAC that I mentioned. We basically try to connect the dots a lot of times. We say, hey, there's a big trade in MAC. What is it? First of all, it's a name I've never traded before. It's a mall REIT, or it has some exposure to mall REITs, and you start to think about it, and you start to put together the puzzle. And I'll look on Bloomberg, and I'll kind of see, hey, mall REITs are getting some attention today. Why are they getting attention? Because a couple of the retailers actually had surprise, really good earnings, and you kind of connect the dots, and you figure out, you don't necessarily have to take the trade just because you figure it out, but you kind of get it. That's why somebody would be buying a mall REIT today, because the retailers. And so I'll connect the dots. Bloomberg helps me do that quite a bit.
Fantastic. And you're offering, well, I don't want to steal your thunder, but I think you've agreed to offer a free trial to round the clock.
Yeah, absolutely. So yeah, I mean, I would love to see you guys check this out. Excuse me. But yeah, so basically just for today and tomorrow, because it will expire tomorrow, but you could check us out for a week free. So here's the link. I think Simon has already kind of given that out, but I'll throw this in here.
I did, yes. It's in the
you got it. Perfect.
There. Yeah, the Tribeca Trade Group. I'll just post it again for anybody that may have missed it. This is good. This is the Sunday night newsletter that you get, and then you're actually giving access to the real-time trade group as well.
Right. Yeah. So I very much, so when I was an institutional trader, I used to actually write a note for, that used to go out to hedge funds. So I do the same thing now, but retail investors get it. So that comes included with your membership. And yeah, so I would love to see you guys check it out for a week. It's no obligation, 1 week free. You could check it out for free. If you don't like it, you obviously can cancel. But we've had a lot of success. I don't do a lot of the free the free weeks, because I use some expensive systems and I have to pay money right off the bat. Things like we use Slack, which is I will say this is a really nice platform to be on, but they charge me per user, so I really don't do a lot of offering out the free trials. I usually discount the first month. So again, first time we're doing it, so
That's
by all
right.
means take advantage.
I think you've offered a 50% discount before. This is the first time you actually offered a free peek inside. That's great. How many traders do you have contributing? Is it just yourself, or do you have more? I think there's a team of you, is there not?
Yeah, there's a team. We have two other moderators, and they really complement the room very well because we have one guy, one trader who does a lot of selling premium trades. So he does a lot of like the iron condor trades, which I think is a real good trade to have in mind when the overall market is just kind of grinding and not moving, and trading in a range, which we've certainly seen that happen for like a couple weeks or a month on end. And then I also have another trader who really focuses on the nitty-gritty, and I'll kind of give you an example of that. Focuses on the nitty-gritty. So he basically posts charts all night long, and he looks for setups. And this really helps us because it's a lot of names that a lot of times I've never heard of. And when we talk about the setups, we do our homework for our subscribers. And then when we see an aggressive trade that hits the tape, we're like, hey, well, Pat has already pointed out that Micron is a good setup here, or PI is a good setup. And it really helps us to kind of do the homework myself and kind of give it to our traders in the room so that they're prepared going into the trading week and the trading day. Pat basically does this almost every night, puts out all kinds of charts.
Fantastic. What time is the room open to? Is it US open time, so it would be lunchtime for us?
Yeah, so it's so my time Eastern. We open it up at 8:45 in the morning, and then we basically go through. It's basically we start about an hour before the U.S. markets open, and then we go a little bit after the U.S. close. But our room that we use is open 24 hours. So if you're we've got a few traders now that are based in Europe. And it fits them pretty well because they can come in for a couple hours and then they can kind of catch up. We post all of our trades, so it's good for the part-time trader as well as the full-time trader. They're able to adapt pretty well. And if same thing, if somebody's even working half the day full-time and they come in and they're only trading in a couple hours, they could quickly see what trades that I'm taking. So that's the way I've kind of structured it, so it's very easy for traders to kind of catch up. And then we also kind of chit-chat sometimes after hours, like we were talking last night about how crazy this Bitcoin thing is right now. So we were watching Bitcoin last night. I have to confess, I have fear of missing out. I haven't traded Bitcoin, but we were watching this thing, go through, shoot to the moon last night. So we have it up all hours. So sometimes when I'm doing research at night, traders will come and ask me questions, which is probably the best time to ask questions and to learn is when the markets are closed and not moving. So I do some after hours instruction, although my girlfriend is not a big fan of that, but
Yeah.
but this is what we're very passionate about the markets. This is my why I decided to leave the institutional world, to kind of come and do this on my own. So we're all very dedicated and around after hours.
Certainly are. Any more questions coming in? I know it's been a long day for everyone. Christian, maybe I think next time must have you on maybe a little bit earlier during the day, because of course you're coming on evening time for us, and I am seeing a pattern of the last couple of sessions. The attendance is dropping off a little bit. Has to be said, it's an unusually warm and sunny day here in the UK.
So very nice.
I think after a long, dull, wet winter, everybody's we still got a great attendance. Don't get me wrong, but it's not. I think a lot of barbecues might be getting dragged out the garden sheds as we speak.
Awesome.
So
very good.
We are. But thanks for your Twitter feed, says Yat, so she must be following you on Twitter. which is good. What is the Twitter again? Just remind us.
Yeah, sure. It's my first initial C and then my last name. So Fromhertz, Fromhertz.
Put that in there. Fantastic. Okay, well, I think the questions seem to have dried up. So, Christian, I think we'll let you go. We'll say thank you very much because I know you've jumped in an hour ahead and it's ruined your trading and cost you a fortune because you didn't get into that trade in China. So sorry for that. But we will hopefully don't send me an invoice for that. Great to hear from you. We will hopefully people will take up the offer for the free trial because I know it's a good offer. We are putting it in the follow-up email as well. So everybody
Awesome.
that has registered for the event, so there's about 900 people that will be actually receiving that email. Hopefully take you up on that. Thanks so much again. Take care, and hopefully we can hear from you again next month.
Thank you very much, Simon, and enjoy the weather while it lasts.
We will. It won't last long, I guarantee you that. See you later.
Take care.
Bye-bye for now.